warmly welcome you all to the final week of the month of February. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Monday, the 23rd of February. We thank you for joining us at this time on Morning Moves.
All right, we begin news now with earnings. South African petrochemical firm Sasol has reported a 34% drop in half-year profit, hit by lower oil and chemical prices. Headline earnings per share fell to 9.27 Rand in the 6 months to December 2025 from 14.13 Rand a year earlier. The petrochemical group again skipped a dividend as net debt stood at $3.8 billion above its $3 billion dividend policy cap. In East Africa, Ethiopia launched Telestream, a cloud-based digital content platform by Ethio Telecom to modernize the media sector and reduce reliance on satellite TV. The service runs on fiber, 4G and 5G networks, integrating telecloud infrastructure with the Telebirr payment system. Telestream offers 60-plus live TV channels and 350-plus video-on-demand titles accessible via mobile or fixed broadband connections. The African Markets Conference 2026 is underway, bringing together policymakers, regulators, investors, and market operators from across the continent. The discussions are focused on strengthening Africa's capital markets, managing macroeconomic risks, and positioning the continent to attract long-term investment in a rapidly changing global environment. Here are excerpts.
Our theme this year of mobilizing capital at scale reflects a structural shift in focus. Scale is not about increasing the number of transactions. It is about building markets that can access capital consistently, at volume, and at competitive cost. It is about the liquidity, standardization, and predictability, the conditions that allow institutional capital to allocate with confidence. In practical terms, this means moving from isolated bespoke transactions to investable pipelines supported by credible policy frameworks. It means shifting from Africa as a tactical trade to Africa as a strategic long-term portfolio allocation. That shift will not occur through optimism alone. It requires disciplined fiscal management, transparent regulation, credible debt frameworks, robust project preparation, and deeper domestic capital markets capable of absorbing and recycling capital efficiently. Mobilizing capital at scale is therefore not principally a question of global liquidity. It is a question of market design and institutional execution. There are several structural factors that support confidence in Africa's long-term investment thesis. And some of these are, firstly, domestic capital formation on the continent is significant. Estimates by the African Finance Corporation suggest that Africa holds approximately $4 trillion in domestic investable capital. Pension funds, insurance assets, sovereign funds, and banks like ourselves collectively represent a substantial pool of liquidity.
Meanwhile, Fitch Ratings has upgraded the outlook on Ecobank Transnational Incorporated to positive from stable, affirming its long-term issuer default rating at B-. The revision reflects improving operating conditions in the group's key markets, Ghana, Cote d'Ivoire, and Nigeria, along with reduced foreign exchange exposure to support profitability and capitalization. Despite Ecobank Nigeria Limited remaining in breach of regulatory capital requirements, Fitch noted financial and reputational risks are contained with central provisions and amended funding covenants, reducing its material impact on the group. In the meantime, the 2026 SADC Sustainable Energy Week is underway across the Southern African region, bringing together policymakers, industry leaders, and development partners. The aim is to advance ideas around clean energy, energy efficiency, and investment as the region seeks to drive economic growth, strengthen energy security, and accelerate the energy transition. Let's listen.
As a region, we are grappling with the issue of renewable energy expansion in terms of our countries. We strongly believe in regional integration and the role that both the public and the private sector play in all of it. You are therefore encouraged to network as much as possible through bilateral meetings, and we have made arrangements so that you can have these bilateral meetings. We will not be having closed-door sessions in most of what we will be doing. We want to open up because even the media has something to offer to us in terms of renewable energy and energy efficiency. So they will be welcome in your sessions. We'll promote synergies amongst all attendees this year. We'll also have a ministerial segment where, as a country, and each country will be able to present their energy compact, those who have energy compacts. But for those who don't have energy compacts, they have programs which they are engaged in and who want to learn from each other. This is our blueprint in the energy sector, which will help us achieve the national vision in the case of Zimbabwe in terms of Vision 2030, and is captured in our NDS2, which was launched last year by our president. Our energy compact is both for hydro, big and small, as well as thermal, but more importantly, it introduces the issues of renewable energy and energy efficiency. We also acknowledge the important role played by conventional thermal power plants and traditional hydropower plants within the energy mix. Our actions and plans as a region must recognize these energy sources as well as energy efficiency.
Back on earnings street, Talat Mustafa Group Holding reported a 43% surge in net profit to 18.2 billion Egyptian pounds in 2025, fueled by a 46% rise in total revenues to 62.5 billion Egyptian pounds. Real estate revenues jumped 50% to 36.7 billion Egyptian pounds, while hotel sector income rose 30% to 14.89 billion Egyptian pounds. Income from recurring and service activities climbed 64% to 10.9 billion Egyptian pounds. Unrecognized sales reached 441 billion Egyptian pounds by year-end, up 50% year-on-year, expected to boost future revenue. The board approved a cash dividend of 0.30 Egyptian pounds per share, payable in 2 installments by May and July. In other news, Mali is set to gain sea access via the Senegal River with a navigation corridor linking Ambideli to St. Louis. Backed by OMVS and Soganav, the project launches in April 2026 and aims to cut logistics costs and strengthen trade sovereignty. Finally, on News Now, Airtel Uganda posts strong full-year 2025 results. Profit surges 41%. The telecom operator reported total revenue of 2,249.7 billion Ugandan shillings for the year ended December 31, 2025, up 13.3% year-on-year. Data revenue surpassed voice for the first time, reaching 1,101.7 billion shillings, while voice revenue came in at 1,057.4 billion shillings. Profit after tax rose 41% to 446.9 billion shillings, supported by cost discipline and strong data growth. EBITDA hit 1,235.3 billion shillings, with margins expanding to 54.9%, while EPS increased to 11.2 shillings. The company declared a final dividend of 142 billion Ugandan shillings, subject to shareholder approval. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly after the break with Grace at the FMDQ ticket tape room, giving us our market updates.
First, we observed that our financial sector continued to expand alongside solid economic performance, supporting increased credit to households and businesses. Total financial sector assets from January to December 2025 increased by about 24%, reaching 15.9 trillion Rwandan francs. And this was on the back of deposit growth, which enabled growth of loans, higher pension contributions, improved investment income, and improved insurance premiums. Importantly, the growth that we recorded in the financial sector was recorded in all subsectors. Banks' assets increased by 22.7%. For microfinance institution, growth of assets was at 22.9%, and the insurance sector grew by 14.3%. When we look at the pension sector, their total assets also grew by 35.3%. And in non-deposit taking financial institutions, which are a new category of institutions that lend but do not take deposits, the decline of 10% that we see is not due to the shrinking of their balance sheets, but more from the transfer of BDF assets to BRD, the Rwanda Development Bank.
This year, we will continue ramping up waste mining and invest further in our fleet to improve reliability and drive for greater operational efficiencies. Our focus on operational excellence delivered over 600 million rand in costs, bringing the total amount of savings since our reconfiguration began in 2024 to 5.1 billion rand. Sishen's cash unit costs remain broadly flat at 530 rands per ton, while Kolomela's improved by 7% to 374 rands per ton, outperforming guidance. Despite 4 derailments, ore railed to the port increased by 6%. Rail performance improved to 84% of contracted capacity, and with better equipment availability at Saldanha Bay, sales lifted by 2%. This progress reflects the collaboration between Transnet and the Ore Users Forum, of which we as Kumba are an active member. We recognize, however, that there is still more work to be done, and the Ore Corridor Restoration Program and the Mutual Cooperation Agreement are also going to enable faster, more efficient maintenance and improved reliability.
Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there, Grace. What are the markets saying today?
Thank you, Melissa. We are back to the final trading week of the month. We start as usual with equities. The Nigerian Stock Exchange added 0.65% to 196,263.50, while the BRVM in Abidjan climbed 1.25% to 407.41. The Nairobi Securities Exchange advanced 0.47% to 210.87. In South Africa, the Johannesburg Stock Exchange rose 0.98%, and in North Africa, Egypt's EGX30 jumped 2.64%, while Morocco's MASI is 0.26%. Let's do a quick round of some of the Pan-African currencies. The rand strengthened 0.23% to 16.01 against the US dollar. The Egyptian pound weakened 0.40%, while the CFA franc slipped 0.18% to 556.73. The Kenyan shilling was flat at 128.99. The Moroccan dirham gained 0.32% to 9.18, while the naira fell 0.22% to 1,345 naira 74 kobo as at 13:35 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude edged up 0.15% to $71.87, while US WTI gained 0.29% to $66.67. Natural gas surged 2.53% to $3.12, while Arabian gasoline slipped 0.32% to $1.99 as at 13:25 GMT. Now, finally, to metals prices. Gold climbed 1.83% to $5,173.90. Copper dipped 0.50%. Platinum added 0.34%. Aluminium inched up 0.01%, while iron ore fell 0.28% to $99.33 as at 13:27 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates. And that's all for today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching, and we'll catch you same time tomorrow.